Hey, you guys, welcome. Uh, I'm back to do another analysis video for you guys on today. And today we're going to be looking at quite a few currency pairs. So, about five currency pairs, okay? But let's talk about the last 2 weeks in the market. The last 2 weeks in the market have been kicking my butt, okay? There's been a lot of reversals, a lot of deeper retracements. And I don't think it's quite over with some of the reversals. And I'm going to explain two reversals here, but I'm also going to explain three other currency pairs that continued their trend, the analysis behind it, and some of the trades that my students actually ended up taking. Okay. But before we do, let's get into two correlating currency pairs, which is going to be pound AUD and AUD USD. So if you follow me on TradingView, and by the way, the link to follow me on TradingView will be down below. If you follow me on TradingView, then I've already shown you this setup through the written analysis. Now, when it comes to pound AUD, it has been pushing down very well over the last few weeks, over the last, actually, probably over the last few months. She's just been in this strong downtrend. Now, I've not traded her often because she's not fit my rules, but when I'm looking at this pair now, she did have a potential opportunity, and maybe still does, depending on how this week closes, to stay below 1.75879. Because if you guys look at what's going on this price chart, we have a lower low, lower high, lower low combination. And what this lets us know is that this pair is in a downtrend. Now, in order for us to want to take a sell for on pound AUD, we need price to stay below 1.75879 because what we trade is supply and demand. Basically, what price are the Australians buying the pound? The last highest price that they bought pound for was at 1.75879, around this area. So if it can stay below this area, they're going to be able to buy it cheaper in the upcoming days. But if price passes this exchange rate, what this means is that they will now start to buy the pound currency at a higher price, which means for us as traders, we can trade this information. But I wouldn't hop on the sell bandwagon just yet, nor the buy bandwagon just yet. This is when I would stay neutral. Now, with my analysis, what I told my students was let's wait to see how today's candle closes before we get into a trading opportunity, or let's set some sell stops. And sell stops are when price passes a specific exchange rate and it triggers you into the trade automatically without you manually have to do so. But we haven't gotten triggered. I had a sell stop here below this candlestick. And as you guys can see, price has pushed up. So the sell stop is null and void. But what I do want to say to you guys now is just be patient with this pair. If you get any type of bearish candle, and I'm going to say on the daily time frame, then yes, sell back down to the previous low. Y'all may hear my children because it is spring break, but we're going to continue. Okay, mom life. So, if you get any type of bearish candle this week below 1.75879, this could be a really good trade back down to the low. If not, sit on your hands. We're not going to take a buy. We're just actually going to sit down and wait for price to pull back. So that's pound AUD. Now, the reason why I'm even more neutral on pound AUD versus with the buy or the sell, one of the reasons why I am interested in pound AUD, I had to take a pause really quick because of kids, is because AUD USD has reversed. And so I just took a recent buy on AUD USD. I actually ended up, well, actually a sale, I actually got stopped out. And price pushed up a little bit higher. And so I sat on my hands. And now, as you guys can see, this is a really good reversal here on the daily time frame. And so if y'all look here to my left hand side where my daily time frame is, you can see price went from 0.75401, 0.74563, 0.6619, and now that we have a lower low right here, this indicates to me that price wants to go down. Now, what am I doing for right now? I'm actually on my hands because I don't sell low, meaning I cannot take a sell right now because price needs to pull back in order for me to enter this trade. So if price can pull back to my estimation zone, which is right here below this candlestick, I am going to want to take a sell. Now, this is going to be a long-term sell because AUD USD technically is in a downtrend. If we go to the weekly time frame or the monthly time frame, you guys will see that AUDUSD is making lower lows and lower highs, specifically on the monthly time frame. And so this is going to be for hundreds of pips that I'm going to want to take this trade for. But I want to see a pullback to minimize my drawdown and to further confirm that price wants to stay below where I want to enter the trade. Okay. And so that's AUD in a very, very quick nutshell. Now, there are the last three currency pairs I really want to go over. So one of the first pairs that we're going to be going over is going to be USD JPY, and this is better if we look at it on the 4-hour time frame. Now, let me take a pause here really quick. For you guys who do not know, if especially if you're new to my channel, I am a forex coach, which means I teach people how to read these price charts a little bit more accurately if they are trend traders and also swing traders. And if you guys notice, I am looking at higher time frames: 4-hour, daily, weekly. Optional is monthly time frame. And so one of my jobs is not to make trading hard for you, but to make it easy. As you guys can see, we're looking at clean charts. There's no trend lines, there's no support and resistance. We are basically trading higher highs, higher lows, lower highs, but more so with specific entries at lower highs in a downtrend for sales and then higher lows for buys in an uptrend. And one of the reasons is because if you guys can see, I'm looking at only one entry point: buy in uptrend, selling downtrend, and that's typically pretty much it. And if you guys follow the trend, what there's a few things you'll learn. I'll probably do a video on this. A few things you'll learn is that you're not going to always have an entry on the same currency pair time after time after time again as a swing trader. Last night, me and my students, we were observing that with pound AUD, as I stated to you guys, it's been a while since I took a trade on that currency pair. So I've not had to look at that currency pair as often. It's been a while since I've taken the trade on AUDUSD, right? And the last trade I took, I got stopped out of, right? But the trade before that, I banked over 280 pips. And so there are going to be times when, as a swing trader, you just got to let price flow. You got to let price go. And once it pulls back, it'll come back to you. And this is one of the things that I love teaching. It's not to overwhelm yourself trying to trade the same thing day after day, unless you're a day trader. But even as a day trader, you still don't have a trade on the same currency pair unless you force it or you just have a really, really good strategy to help you catch pips on that same currency pair, which some people do, especially if they're using support and resistance. But because I'm absent of it, because I want to see price flow, I want to see price go up for the long haul. This is why the technique that I teach works well for swing traders who are busy. As y'all can see, I have children, so I'm having to go back and forth. So it's busy if you're working, if you're a mom or a dad who stays at home, if you work from home, so you don't have to keep looking at your price charts. I want you guys to think about that. When you're picking a coach or a course or someone to work with, a community, make sure they're teaching the same system that everyone is learning and it's not everywhere, but also make sure it's something that's congruent to your lifestyle. Okay, so let's continue. So at USD JPY on the 4-hour time frame, you guys can see that we are in an uptrend. Price was making higher highs and higher lows. And at the point where we wanted to enter the trade was right here back at our estimation zone. And this is a technique that I've created specifically for supply and demand. And it does look different than how most people teach it, which is very understandable. Every coach teaches it differently. But it's really, like I said, based on your higher lows in the uptrend and lower highs in the downtrend, and not trading in two different directions. As you guys can see, I'm not telling you to sell if price passes your zone. That's the worst thing that I can teach you. What I'm here to teach you is just keep buying if price is above these higher lows, or just keep selling if price is below your lower highs. And that's pretty much it. One trade decision to let the trade run. If you're having a problem with holding your positions, it's because you're letting price break, or you're putting barriers like trend lines and like support or resistance. And it's harder to get back into trades once you're out of them. And as you guys can see, look how price is flowing. She's just flowing. She's not having deep pullbacks. We call this high volatility. And so now, as you guys can see, what's happened is this is a trade that one of my students was in, and she just took profit today. And so, price did linger a little bit. It took some time to get here, but her entry should have been here around March 29th. Through some consolidation, price almost came to stop her out, but she held the position. So risking around 90 pips, depending on where she entered at, but she probably should have gained more than 280 300 pips on this particular currency pair because price is in an uptrend. We only want to buy in uptrends. We don't want to sell. We don't want to focus on every candlestick, but this was a pretty good trade. So let's go to Euro JPY. This is also one that my students are holding. Now, for me, I was in this position. I moved my stops to break even and I got stopped out. I never entered the trade again. But this is one of the ones that my student is capitalizing on and she is in profit. This would be the time when I would tell her to move her stops to break even so she doesn't lose any money. So if you're watching, move your stops, okay? For any of my students who are in this. But as you guys can see, this is a very good trend. It's uptrend, higher highs, higher lows, higher highs, higher lows. We dare not sell against this trend. We do not want to sell against this trend, right? And so the entry should have been this trade should have been entered here around March 31st. And then here we are, you guys, about what's this 10 trading days later and still in this position, right? For the ones who held this position. And so if it can come back up to 137.559, then this will be a really good trade because we've just been buying and buying and buying. There's nothing that's been selling to sell this currency pair at all. And so it really is a true statement that you don't want to trade against the trend. The trend is your friend. And this is what they mean when you don't have barriers, you don't have things blocking your view from price getting back up to your take profits. Okay. And then lastly is pound JPY. Now, this is when I actually sold and I got stopped out of. Okay. So let's talk about this pair. All right. Because for me, I moved my trades also to break even because I just couldn't stand the consolidation that was here. It just didn't look right. And so let's talk about what's going on here because price could still peak. It still could go down. And let's talk about why. So this is a 4-hour reversal on the daily time, on a 4-hour time frame. I think this is one that I've actually shared on TradingView as well. If not, you guys are about to get it now. So when it comes to reversals, you want to scout out where price is and how it's reversed. So if we look here, price had a higher low at 159.86 and then it went up to 164.647. So at this time, the people who live in Japan have been buying pound at quite a high price. They were able to buy pound at a low price at 159. And the moment that price passed this lower low here, this says, hey, in the future, you might be buying the pound at a lower price, but it needs to be a pullback first. And we can see this is a deeper retracement, aka the pullback. And so if price can stay below 164.64, then, we may see continued sales. But if price goes above 164.64, this would have been a false push down, aka the false breakout, or my friend calls it a pump fake. And I love when he called it that, a pump fake. And so now we're just waiting to see what price wants to do. But when you're trading same categories like correlations, like pound AUD, AUD USD, because they're inverse pairs, they both have the AUD in common. But then you have the same quote pairs, USD JPY, Euro Yen, pound JPY, they all share the Japanese yen. What happens and what's going on here is that some pairs move the same because they're correlated because of the currency. So whatever happens fundamentally, those pairs tend to move the same, but sometimes there are runts. Like here, how we have the reversal. If you look at USD JPY and then Euro JPY, they've pushed up to your USD JPY pushed up to make new highs. Euro JPY hasn't made a new high, but she's on her way, and then pound JPY is on her way back up to this high. Do we know if Euro JPY will make a new high? No, but we're in hopes that it does. Do we know if pound JPY will make a new high? No, but we're in hopes that it doesn't because of the reversal. And so sometimes when you're trading in the same category, it's not that you want to be in the same trade all the time, but just know all of them can make it to your take profit. Some of them may not make it to your take profit, but as a swing trader, this is good because you want pairs to be cycling out. So if you make one, profit, bank one, profit, lose one, you're still in profit. As long as you use the same risk percentage. So on these three trades, let's take an example really quick. If you risk 1% on USD JPY, Euro JPY, pound JPY, if you lose a trade, you're down 1%, but still up 2%. If Euro JPY wins, well, technically, you'll be around. Yeah, you should still be. You should be up 2% depending, or a little bit under 2%, but you're still in profit. Okay, so that is what is going to matter when you trade. But you guys, I hope you guys enjoy this video. And if you did, comment below what was your key takeaway. But watch out for these future currency pairs in the future as well, because they could have some really good trade. So this is really good information. Okay. So have a safe trading week, and I'll talk to you guys later in the next video.